get to work. So we'll just start looking at the chart right out of the gate. First of all, looking at the market right now, you're seeing a couple things that are moving around. The Dow futures were down. We were going to start with a pop. We were going to start with a drop, rather. The normal slump day on Thursday after we get the bump day. We were down about 120 down to 150 points. Market bouncing around down, and then all of a sudden the unemployment claims came in much better than expected. And as Rick Santelli on CNBC told us, this is a great number. It doesn't tell us a great situation about the employment situation, the job situation, which we'll get more of a view on tomorrow. But it does give you some hope that the claims are at least going down right now. We saw a jump last week, and that actually brought it down. Unable to start correctly. We really are going to have to do this without PowerPoint. This is going to be an interesting day for you guys. So anyhow, futures bounce up now. Now we're up about 20 on the Dow. NASDAQ's up as well. We're going to see some strength. Why were futures down? Well, they were down because we saw a little bit more bickering. Nancy Pelosi is going to be on CNBC this morning talking about what's going on. Mitch McConnell's going to follow her up as well. It still seems as though the two parts are theoretically apart. Exactly that. They're not coming together. One of the things that is also going on here is last night, I don't see, and if we had the slides, you could see this, but Treasury announced that they're going to have a huge auction next week. They're increasing almost by threefold the auction of treasuries that are going out there into the bond market. This is because of the fiscal stimulus that is coming down the pipeline. They're trying to get ready to start writing those checks. Of course, you've got to put money in the bank, and the way that they do that is they sell those bonds. In other words, we're going to be selling another round of huge debt. It's going out over the next 3 auctions here. It's going to be incredible. And I'm not trying to sound like the president when I say that. It truly is an incredible number that is going out. That means one thing and one thing only. If you followed my lead on, first of all, gold, Eldorado Gold, silver, we don't have a position in Night Trader yet because we've been trying to thread the needle on Wheaton, but the dollar as well. Looking at the UDN, that is the inverse dollar index. Following all of those as a hedge until the year end, we're going to get a boost out of this because the stimulus package, along with all of this debt that we're taking on, does not mean good things for the dollar. So expect to see that continue if you don't have the UDN as part of your ETF right now or your ETF portfolio. And that's kind of a foundational. That and bonds are a foundational part of anybody's portfolio, or probably should be. If you don't have those, take a look at it. Ticker symbol UDN. Let's take a look at the chart because you're probably sick of looking at me. The other thing that, before I get onto that, interesting reading last night on Bloomberg talking about the danger of a vaccine. So when we do get a vaccine, and this is a headline on Bloomberg, and again, if we had PowerPoint going with us today, we'd be able to see what I put together for you on that. But the dangers of the vaccine actually coming to fruition, if it were later this year, at the beginning of next year. And one of the things that we're talking about is the fact that the vaccine has caused us to get away from cyclical stocks. And this is a great write-up, a great report from Goldman Sachs. It's caused us to get away from those cyclical stocks, the financial stocks, those stocks that I'm calling the zero volatility flatliners. There's zero volatility in their flatline for one reason, because money has been migrating away from them. It's every day. Somebody in the stream asks about the XLF, and at some point, somebody will ask about it today. I hope that's a lead. That's me kind of throwing a softball out there. But at some point, somebody will ask about the XLF, and it'll be the same answer. We're in this flat line, no volatility. This economy right now, because of the COVID-19 pandemic, has caused us to go out and find volatility elsewhere, namely large cap tech. And if you look to the downside, it's oil and energy. We're going to look at the sector breakdown that I showed you yesterday, because it has exactly to do what Goldman Sachs is saying. If we have a vaccine that comes through, all of a sudden we could hear a big vacuum noise coming from large cap tech that's going to start making its way into those cyclical stocks and back into the financials. One of the rules that I've been taught over my 30 plus years of trading experience is that the market is led higher, not by technology, and I call them the new blue chips rather, but technology is not normally, it goes along and it leads in the last couple of decades, but if you look at the market from an economic standpoint, certainly semiconductors have something to do with the economy. The more products we make, the more semiconductors go into them, yada, yada, yada. But transports and financials have always been a key factor in any long-term rally. We're not seeing them act up right now. Transports, obviously, because of the airlines who put their hand out yesterday and are hoping to get some money. And then the financials, because money's gone away from them. We could see a complete reversal of that if we see a vaccine come through by the end of the year, which means thank you, Andrew, we are going to have to be ready to do a flip, or not necessarily a flip, but at least a pretty quick change here. We're going to have to be nimble when that happens, as cyclical stocks start to come back into play, because the economy is going to go off in a different direction. So I hope that makes a little bit of sense, and maybe that makes up for the fact that we don't have slides because of PowerPoint. And I'm going to try to click it one more time because there's some earnings news in there as well, but I can pretty much try to recite whatever we've got. Let's go and look at the charts that I normally like to look at, and we're going to look at them using E-Trade instead of or E-Signal instead of having them up in the slides. So, and my plan for today was to talk a little bit about the headlines, what's going on. We've kind of talked about that. Earnings last night, we got a mixed bag. Camping World came out, they beat. We're going to look at a chart of Camping World. They beat. They actually had a great quarter. Fastly, another one that everybody likes, FSLY. The company came out, beat, gave good guidance, down 17% this morning. We're going to look at the chart for Fastly as well and figure out how you want to trade that stock as we make our way through the day. And then Wayfair, I want to take a look at Wayfair because their numbers weren't as strong as everybody thought they were going to be, but at the same time, they were good numbers. Remember, we've all been on Pinterest, right? We've been on Pinterest, and that's why Pinterest has been going through the roof. Well, guess who does all their advertising on Pinterest? It's Wayfair, and they've got some benefit from that. There's that pesky PowerPoint is not going to work for you. So we're just going to go it on our own today. Let's look at my favorite first, Camping World Holdings. Camping World Holdings came out. You know what I'm going to do? I'm going to pull up a different note here just so I can give you the actual numbers on the stocks. And give me just a second. This is the information that you would normally see in those lovely slides that I put together. So Camping World Holdings company came out last night after hours and beat expectations, top and bottom line. Revenue was better. Actual revenue was 1.6 billion, 1.4 was the estimate, and you had a surprise of $1.01. So their actual number was 162 versus a 46 or 61 cent. I don't think anybody's surprised. I mean, it was a great report. Everybody's out there buying campers. They're trying to catch up with the hip kids like myself who had them last year. Nonetheless, Camping World Holdings trading down this morning. Why? Well, look at this rise that we've seen in the stock. Camping World, let's pull up the morning quote. The stock out of the gate started taking off. Then it pulled back 3% in after hours trading last night. Now it's trading down 1.66%. It's going to open up around $41.50. What do I think happens? And this goes to exactly what we said yesterday. Somebody asked about, hey, I have Camping World Holdings. What's my play here? Well, I think the play is that you put in a stop loss. And as always, I tell you that I've got a position in Camping World Holdings. I took it off yesterday right ahead of the close. Stock was going up towards its highs. It's one of those situations where I looked and said 10% up or down. Do I want to risk it? Even 3% up or down. I'm not worried about missing a 3% upside, especially when the stock is going into overbought territory. In this particular case, it looks like that was the right play. I think we pull down below 45 or below $40 here. And I think the stock probably touches down maybe to 37.5, maybe 37. I'm not sure we make it to the 20-day on this one because the price increases are coming from the analysts this morning. So we're getting upgrades on prices right now. The last one I saw was $45 from $38, but there were 4 or 5 upgrades on the analyst side this morning. So watch Camping World Holdings to make just a little pullback, maybe a little foray below that $40 level before it starts to take off and move again. So that is the buy right now. I'm looking at around, let's just call it 38 just to make it safe. and make it a little bit safe and not miss out on a 37 print because we're getting a little greedy, because this stock's going to continue to rock. Their numbers were great. They said that they told us that their numbers were great. Year over year, quarter over quarter looked good. Camping World Holdings remains a buy. I think it's a stock that if you haven't been following and adding to the portfolio, you take a look at it. AstraZeneca in the news this morning, not because they had anything to do with COVID-19, but remember, AstraZeneca actually has other drugs that they're working on. They're moving another one of their drugs into phase 2. The stock's trading up 0.5% right now, along with the rest of the market, not trading up as much. Look at the support at the 20-day on AstraZeneca. I like the fact, obviously, this is my play on the vaccine into the end of the year. Moderna is, again, RNA. Let's go look at Moderna. It's still showing us that little dance it's doing around 75. Doesn't know whether it wants to start breaking up higher. But notice also right there with its 20-day. If you want to double up, you double up. IPOs, Rocket's IPOing this morning. They just had Dan Gilbert on CNBC. They're actually pricing it this morning. So yeah, they went ahead and pulled the rope last night. It's going to be interesting to see. Dan Gilbert looking in great shape too. Jay obviously is going to be running the show there, but Dan's looking good after a year, obviously, of some trials. What a great guy for Cleveland, though. Anyhow, Plug Power. Dan's bringing up another one. Plug Power came out last night, gave us their earnings. Let me get you. I'm trying to pull up again since we don't have the slides for those of you that are joining us a little late. PowerPoint's decided not to work for us today. Plug Power came out. They beat by 7 cents. Their consensus was for a loss of 10. They only lost 3 cents. You gotta love it when you do well by losing money. Revenue was up 18% year over year. The consensus was 56 million. They hit it with 68 million. So they knocked both of them out of the call, but I won't call that out of the yard. The thing that they did do is they didn't give us any upward guidance right now. You're looking for the company really to give that to you on the conference call that's going to happen at 10 o'clock today. I love plug play. And you know that I love to call it plug play for some reason. Let's look at the chart, see how this plays. Obviously, we've had that pullback in the stock. Saw it come down to that $7 level, and this is a stock where I said, hey, you want to acquire it at $8 after this pullback. The stock right now, as I look at the pre-market trading, and I'm bouncing between 3 different screens now to give this to you, so forgive me as I get a little bit of a delay, but we're trading up 9%, 89 cents at 10.22. Stock's going to open up here. Remember, this is one of those stocks that the shorts have been adding to. So you're going to get a little benefit here. If we crack above that 1050 level, which is the high from July, we crack above that 1050 level, and you're going to have some shorts that are going to be scurrying around on a stock that is hard to borrow because the float is thin. So that's going to make this stock even pop more. And Plug Power again showing us in the earnings that they're doing the right thing. Acquisitions, they announced another acquisition that's coming down the road, which is how they've been growing instead of going out and doing it the other way, which is just organically, which can take longer, i.e. Workhorse. Workhorse obviously has to. Let's take a look at the Workhorse just because I mentioned it. The stock actually yesterday closing at $16.93. Still trying to find a little bit of support at that $16 level. Love the stock as we head towards an earnings report there. And hold on 2 seconds. I wanted to pull up yet another one. Blink. And actually, you know what? Let's jump over to Fastly right now, because Fastly was another one that I think is going to be the one that you want to be watching a little closely right now. Fastly came out last night, and let me pull up the exact numbers, because this, again, was a situation where the stock really did a good job on report. I'm thinking of Chegg when I look at what happened with Fastly. First of all, they gave us upside guidance for the quarter, both on revenue and earnings. So they double down and say that not only they're gonna increase their earnings, but they're also going to increase the revenue for next quarter. Fastly trading down right now, though, in pre-market activity by 18.36%. It was 17% earlier this morning. Stock was trading, where was it? 18%. Yeah, 18%. We got a couple downgrades right now, and it's basically on valuation. Whenever you hear that word valuation, you want to start looking at the stock 3 to 4 days later, because a valuation downgrade is typically an analyst saying, I want to lock in a high price and make it look good to our clients whenever it comes around for us to be talking about our stock picks, if you will. So they're downgraded to a perform from outperform at Oppenheimer last night. And again, this is kind of just a book the gain, if you will, for them. Fastly was trading down 14% when they did that. When you look at the stock chart, so we're going to open up right now. If the stock opened at this moment, we open at $89, $90. Look at that. I love the fact that we're pulling down to the 20-day. $90 is your limit price on this stock. Sawtooth activity. If you got into this when it was down at $80 last time, you rode it up to $120. Congratulations, you're up 50% in 2 weeks. Now is your opportunity to put that limit order in at 90, put the 10% trailing and put the 10% trailing stop in on it, and then when it gets up back around that 25, 30, 40% gain, boom, you ratchet that up to 3%, let it get stopped out. You would have been stopped out yesterday ahead of earnings if you were following that strategy. Today, you're avoiding a 20% drop or an 18% drop. I can round it up here. And you're getting back into the stock with that limit order. Yeti comes out, and this is another one of the outdoor stocks. And Yeti was a fast profit stock, I believe, in March or maybe even February. And let me tell you what. So I have, as we know, and Old Yeller knows exactly which one it is. I have 2 boats. I have my little fun boat, and then I have my other boat that's a Chris Craft, that's called Chris's Craft. So I have, if you have a boat, you have Yetis. This is another thing. I have the Garmins because I have a boat. I have Garmins. I have hunting dogs. I have Garmins. These outdoor names. And Yeti specifically right now is one of these stocks that's not only in a sweet spot because of what's going on with the pandemic, but it is also because of their product. To give you an idea, a friend of mine that lives just across that river down there, over in that other state there, that ends in KY. So he bought a Yeti bike, $10,000. I thought, what in the world are you doing? He showed me the bike when he came. It was measured to him, carbon fiber, etc., etc. Next, my sister buys a bike. It's a Yeti bike. She spends $12,000 on this bike. I look at myself spending $700 on a cooler, and everything all of a sudden seems a little bit more rational, right? Yeti has done an amazing job of protecting their brand, coming out with new things, and obviously making it a necessary for anybody who camps, who boats, who bikes, obviously. And they continue to come out with these products. I love the Yeti product. And I bought some of the ripoffs. I bought the Arctics. And they don't do the same thing. Yeti continues to surprise because Yeti does a good job at what they do. And sure, they pay a little bit more, but they showed it to us on the earnings. This is one of those stocks that in full disclosure, I do own shares of Yeti because whenever I own a product that I believe in, I've got Garmin too, and I've suffered through a lot with Garmin, but I believe in the product because I've got it's a situation where I've got 2 dogs where if I lose a dog, and one of these days, maybe I'll tell you the story about my friend Jim, who lost a dog in Mexico for a day and found it because of the Yeti the next day. We were hunting in Arizona, in Patagonia, Arizona. But when I use a product and I believe in it, Garmin is one of those, Yeti's one of them. I kind of find that it's just like my walk down Main Street, folks. You should be doing the same thing. Let's take a look at the Yeti chart. Fastly, you can buy right now at, you can buy pre-market at, you can grab that thing for $87.95. Again, guys, I'm looking at this from a limit perspective. Fastly is one of those, even with the downgrade, because of their taking the valuation play. You're going to look at this a month later, and it's a stock purchase at 90 bucks. If you're looking at the option, and I always like to throw out a little bit of an option play for people, and you're not going to be able to see obviously where we're going to open, but you look out to the next quarter in a case like Fastly. Don't look out over the next month or so. So look at those, maybe even the December 18s, which is 135 days away. And if I'm looking at the Fastleys right now, they closed at 36.50 on that. That's because options was approaching for the 90. So that was in the money. You go out and you buy the 105s and you're down to 29 bucks. This is one where you got to let the market open up today, because obviously these are going to be much cheaper after this decline. But you leverage it up with that and vertical spread it if you like. You guys know what you're doing. So it's always fun to just give you a little itty bitty idea. But Fastly right now down at that $90 to $88 level. And I wish I could hear what he's saying, because Mr. McConnell is on right now, or Senator McConnell is on right now. Fastly, 87 bucks. Let's take a look at Yeti. I said I would look at that one as well. Those of you that don't know what they did after, and I'm not sure who even brought it up in terms of the request here or the look, but Yeti, let me give you the exact numbers. And again, this is all comes down to not only the pandemic, but just absolutely their product, and they've got a cult following right now. Stock up 7.5%. We were up 10%. They beat by 25 cents, and they beat on revenue. The thing they didn't do that I would have liked to have seen them do is give us a little bit of an outlook. But to think about it, if things keep going the way they're going right now with the pandemic, sure, you're going to have the season cool off in terms of camping and all of that. But at the same time, Yeti's still going to do well for the next quarter. That's a stock that I look at right now. Yeti trading around 51.63. The stock's going to open up at, give me 2 seconds for that one to refresh. The stock is going to open pre-market. We're trading at 54.21, so 55. I'm not sure you get much of a pullback in Yeti, I've got to be honest, because we didn't see this parabolic move ahead. 51 bucks. Maybe try to buy it at 52. Let it come down from 54 or so, and that's where it goes from. It goes from there. Yeti, a nice trade. Let me take a look at what you're looking at right now. Camping World after earnings yesterday. So my thought on Camping World after earnings is that this is a buy after, and I think I already mentioned this, we got some downgrades on it because they did well. It's just like telling the kid, so again, I can't give you an analogy on it. I'm sorry. Usually I can. This is a stock I think pulls back to 40 bucks. You buy it at 40 bucks, maybe $38 at this point. It's going to continue that trend. If it does make it down to the $35 level, you feel lucky at that point because it made it down to the trader's trend line. That is a possibility because we're going to see some profit taking. The stock is overbought. I wouldn't set my sight on $35. I'd be looking at 37 and then riding it back up to 47 or so. This is going to be a stock that's going to continue to move through the summer. You know what? At the end of the summer and even into the fall. And if you think about it, people right now know they want campers. If they can't get into a camper now, they're going to be looking to buy them over the off season, whether it's used or whether it's new. They're going to be looking to buy them in the off season. So this is not a demand thing that's going to slow up. I think this is going to be something that continues. Yeti is a nice investment. I like it as an investment because they continue to innovate on their brand. If you're looking at it from the trade right now at 51.63, I think it's a nice, it'll usually sees a little bit of a pullback. 2 quarters ago, if I recall correctly, the stock went down. Let's take another in February. The stock went down, and obviously we were going down because of the coronavirus. It took a little dip in February right before we, right in here. And this is where their earnings call was right after February. It was breaking down below the 50-day. I mean, the writing was on the wall with the 50-day breaking down. Their last was in November. You go back to November, and it was actually right here on this top. This was their earnings. They popped on earnings and then came back down again and then started to rally. We could get that little bit of a pullback. To answer the question, I think Yeti is a purchase, an investment right now. Wish I could take a camper to Maui from You could pull a what was the movie? Tom Hanks. You forget it. I'm not going to go off into that. We'll get out of the weeds here. So let's take a look at one more very quickly, and that was Plug Power. Plug Power came in with their earnings yesterday. This is a stock that I love. Took that huge dip. I already went through the earnings results on it. This is, again, one that if you didn't get into it at 8, you're missing out right now, because the stock is going to open up at 10. $10 on the button right now. At $10, I think you hold out, except the shorts are going to get a squeeze here. It's going to pop and continue to go. Your best luck is to wait until you get the next pullback after we hit $11. Probably comes back to 9 at that point. You see the base that it was building up here at 9. Gap up to $11, brings it back to 9 again, and you get in then. Let's take a look at a couple of your stocks, and there's stocks that I have actually been watching as well as I start to look through those. You know what? Let me actually pull something up here very quickly, because I did want to talk. Oh my gosh. All right, so apparently my Excel is not going to work either. All right, guys, we're going to have to talk about that tomorrow, because we have to do this on the fly. But again, it goes back to the idea of this Goldman Sachs report. And I'll have the headline together for you tomorrow. I'll have everything so we can look at it. Hopefully, Microsoft will have figured out how I can use PowerPoint and Excel tomorrow, because if they don't, I'm kind of being left out in the weeds. You won't be seeing me. I can't go without Microsoft for a day. But this whole idea of a market rotation is something that actually goes back to a discussion I was having last night with Bill Padalon. And it really is this zero volatility moves in the financials that got us started on this, and how we've not seen any money moving there. And it's because everybody's been out on the tails, either shorting energy or going long home builders. Stay long the home builders right now. DR Horton came in last night with good numbers. KB Home came in with good numbers in terms of their monthly numbers. Everything is still going for that. I am going to get it. I'm going to get the XLF, but in the XLF has been that quiet zombie sector right now, because there's just no activity. There's no reason to be there when you've got the techs and the oil and home builders that are giving you volatility. And remember, one of my trading commandments is traders want volatility. Volatility equals opportunity. Volatility is a trader's best friend. I am proof perfect of this with a couple of the calls or the puts that I had on some financials a few weeks ago that we finally had to close out because there was zero volatility. Time ticks away. And at Marissa Tomei, my cousin named Vinny, when she stomps her foot on the ground, that's what I heard as my time was going away on these options. Those days are going to end at some point. And this vaccine, if it comes to fruition, or when it comes to fruition, could be it. So since I continue to, I use Office 365. I've got the brand new, oh my God. I pay the Office 365 bill. Don't worry about that. I pay it. It is application, as you can see, unable to start correctly. This is a Microsoft problem. I'm going to see if I can ring up Steve Ballmer while he's down in the basketball bubble after we get off our call and get a little bit of IT help from him. My Penguins lost last night, by the way. Yes, memories, definitely memories. So let's look at a couple things here. Gold and silver. Big ones. Don't expect to see these slow down now, especially as you've got Steve Mnuchin walking down the hallways of Congress with a big fat folder and a really cool looking face mask on. And he's issuing bonds at breakneck speeds. You know that everybody's going to start looking at silver and gold even more right now. And the way you play those, EGO, Eldorado Gold is one of the companies that we have calls on in the night trader system. I've got two more that I'm going to be slipping into the portfolio that are plays. The night trader people, I'll talk to you about that either at 11 o'clock or in some notes. Eldorado up another 1.5%. For those of you that in the night trader system, also Triple D misses last night, and it's not diners, drive-ins, and dives with Guy Fieri. It's Triple D Systems or 3D Systems. The stock's trading down 7%. It was in pre-market activity. We're going to get that move that we've been looking for from the stock. They also lowered their guidance. They kind of came in with the trifecta of bad news. Actually, now they're down 10%. So I'm going to need to see that, Jerry. Marissa Tomei's best role ever was in Seinfeld as the girl that wanted to go out with George. Anyhow, we're going to get the move we've been waiting for on Triple D as the stock's trading down 71 cents or 10%, trading down to $6.35. Remember, I was looking for a $6 print. We're going to open up right down here below all of these lows. So Triple D is going to give us a move that we are looking for, that we have been looking for, and certainly going to catch up with that. UDN, love the March 2021. A fast profit trade was the fast profit trade was for the January 2021, and they're very cheap when you look at those UDN calls, guys. They're very, very cheap. Oh my gosh, you're making fun of me about the Microsoft. I'm telling you, the bills get paid. Don't worry. So a few others. Silver. Take a look at silver. We're going to get that breakneck speed as well on silver here. The SLV shares are trading up in pre-market activity by about 4.71% again. This is taking off at a parabolic rate that is unbelievable at this point, since we're in that overbought territory. I don't expect it to see it stop until Mnuchin actually says he's going to stop issuing bonds and stimulus packages. So Triple D, yep, the implied volatility. Andrew, I did look at the implieds actually last night. I looked at the Jerry's bribing me right now. I looked at the implieds, and we'll see what the implieds look like this morning, because they should come down just a little bit. But the Triple D is actually going to give us a move, and you know what? We're going to be in the money on that as well. So intrinsic is, you're not going to take away the intrinsic. We might have to muscle around the market makers or put some limit orders in just to see. Let me chop over to the question and answer. For not having slides, I've gone a long way today, and I hope I've given you a lot of information. Somebody's wishing us good morning from Singapore. Can you have a trailing stop and a sell on a higher price sell on a stock? Can you have a trailing stop and a sell order? I'm assuming it's supposed to be at a higher price sell on a stock. Answer to that is no, because a trailing stop is a sell order. So it's just a different type of sell order. This will be our Education 101 today, which I like to do. A trailing stop is a sell order. It's a type of sell order. So if your broker were to allow you to put in 2 sell orders and you've got a margin account, you're going to end up short the stock. It could happen. Don't take my word to the bank, because there could be a broker out there that could possibly put in they would put in, if you had a limit order to sell something, most of the time they'll come back and say, if you're selling 1 share of AB or 100 shares of ABC at a price of 100, and then you put a 3% trailing stop in on 100 shares of ABC, it will say that you don't have enough shares of ABC to sell, because it wants you to identify as opening the position as a short position. I'm not going to say that there's not a platform out there that maybe has a glitch that would allow you to do that, but you should not be able to put in a limit order to sell and then a trailing stop. And really, why would you? If you want the limit, you can pick between the two. If you're picking a limit order, you're targeting where you want to sell. If you're picking a trailing stop, you're saying, okay, it's hit my limit, or it's hit my profit limit. I'm just taking the gravy from this point, and I want it to close down if it starts to pull away from me. And then you can turn around, you can have a limit order to buy, if that's what you meant, as you have a trailing stop. So Camping World, for example, or Fastly, I could have had a 3% trailing stop in on Fastly to sell my 100 shares that I have, and then another order to buy 100 shares of Fastly if it hits $90. Absolutely, that would work. I do it all the time. So I hope that helps with that question. Let's go over to a little more of the chat here and make sure nobody else is making Let's look at these because these are getting a little interesting right now. And JMIA, and there are a couple of others. And again, I hate to tell the 845 people that they have to, they have to wait until tomorrow. But we're going to talk a little bit about PAGS tomorrow as well, and maybe today on the stream. But I did look into, I started looking more into Opti, and I have a friend who is actually a superintendent at a large school here in Ohio, large school district, and he's actually familiar with Optech International and their products. This is a stock that's very interesting. I'm not going to go out and recommend it because it's a 15-cent stock, but they're definitely getting some, and they've got one of the Shark Tank, I forget which one of the Shark Tank guys signed up to be part of their the company here and getting it off the ground. They were on Shark Tank at one point, but this is an interesting. A couple of airlines are also looking at using the information, and they've got a patent pending on the light that they're using to do that cleaning. Very interesting stock. I don't like buying 15-cent stocks from time to time. I call them lottery tickets. But at the same time, this is something that's relevant, that's going on with our time. I love that find. I love that you get to share it with everybody. It's a very, very, very cool idea. Let me look up at a couple of others here. I'm trying to scroll up and you guys are typing too fast here. N5's reporting date. You know what? Let's take a look at, hold on, just one more, and we'll make this one of the last. We're getting close to the end here. I've got to get back and get you guys trading within the next couple minutes here. Actually, 3 of them. So N5, trading down 2%, and this was in the after hours yesterday. If anybody didn't catch this, my gosh, we're gonna have to talk about the target raises here. Let me pull up the chart. And N5 is one of those that I love looking at, on a regular basis, breaking above that $75. I mean, this is it's one of those stock that's going to go, I wouldn't call it completely parabolic. Oh, I do have another one that, goodness. Oh, this is going to be for the night trader people at 11 o'clock, a semiconductor company that is actually an earnings play, and everybody else is going to have to wait until the article comes out on earnings outside of Pittsburgh. So that'll give you a hint if you want to start nosing around and try to figure it out. Somebody in my night trader crowd has brought this one to my attention as well, too. It's not a stock that I had on my radar until the night trader crowd pointed it out, but really cool ticker symbol. You guys know what I'm talking about. Neophotonics. Let's take a look at that real quickly because that's a semi that I've been watching. I continue to buy it when it touches down on that $8 level, and obviously it has done it yet again. This is one of those that I've got almost a standing type of sawtooth order in on. Whenever it goes up to $10, it goes in with a 3% trailer. I got stopped out of it. The stock is actually trading flat today, $8.70. You hit $8.50 yesterday. I don't think we hit the 200-day on it this time. I think the stock, because of semiconductors, is one of the hottest sectors still in the market right now. Neophotonics makes another move back up to $10, and that's where you ratchet up your trailing stop to a 3%. Carrier, CARR, which was the split. When we had the rollout, they rolled that when they split the company here, and you're right, slow and steady, nice housing play here. And this gets back to the XHB continuing to show that strength. As long as we see the strength in the XHB, and obviously we're in the summer months here, so Carrier gets a little bit of help from that. But look at the trend there. That's slow and steady. You're getting the same thing from CARR, Carrier Global as well. Watch that stock as it continues to head towards $30. IWM, I don't think we're reaching the end of the line here at some point for IWM. The one thing that I will say, and the earnings article that I wrote, and I will slow things down and even bring them to a close with this, my little commentary here for the day, and I'm telling you what also to look for. So the last 2 weeks, guys, have been the earnings season headliners. And since baseball season got started, when I wrote this piece for earnings, I think it's going to be up tomorrow. It might actually be up today, up on moneymorning.com, and I think it's going to be in the email as well. But I used analogy. We've seen the big hitters come up. You know, the last 2 weeks of earnings have been the big show, if you will. For the next 3 weeks, everybody thinks that earnings season stops right now, and it doesn't. For the next 3 weeks, we're going to start looking at the minor league teams and then the Bush League teams. And those are your mid cap and your small cap companies. And this is where, and here's your analogy, scouting comes in. Good scouting, like the Pittsburgh Steelers have great scouts and they get all that early talent. That's why they're so good. Good scouting, and the Reds have figured this out over the last couple of years, is what builds good teams, good portfolios in this point. And when we start looking at them, there are a lot of companies in this small cap area. And this is why I'm going, this is my segue to the IWM question. A lot of companies in the small cap area that are going to be doing well. The problem is, they don't have the attention of Microsoft. They don't have the attention of Amazon. They don't get the pass on the pandemic all the time. They can put it in their headline and in their report, but they don't get the treatment because people don't love these stocks. These are stocks that are in the proving ground. They're down in the minor leagues right now trying to make the show. Think of that over the next couple of weeks because that's where the volatility is. That's where the opportunities are going to be. Earnings season really is just getting started for the real traders out there because we're getting into the smaller companies. And you've got another 4 weeks that you can cash in on this. And I'm not giving you a promotional or anything like this. I'm just telling you right now, keeping your eye on the earnings calendar and looking at some of these smaller plays like this semiconductor company that I like is exactly how the money gets made in the second part of the earnings season. And even though they're smaller companies, I guarantee you the traders are more active on them, and that's where you're actually going to make the difference here. So with that, Etsy's popping, everything's popping. This is going to be, I think we see a good day after that employment number. We start out, we're down 0.2%, 0.1% on the comp, which just went green. Comp ends up in the green and pulls everybody up today. You know the play. It's Groundhog's Day with the market again. We'll wake up tomorrow and maybe we'll get Andy McDowell to go out with us to dinner on Friday. But you guys, I hope you guys got that reference. I'll see you tomorrow. Hopefully we'll have PowerPoint on our side and some slides. I think we did okay and had some fun though and got some good trades out here. I wish you the best trading success, and I'll see my night trader people at 11 o'clock. Have a great day, guys.